Welcome to Marketplace Tech Bytes, our weekly review of a few of the big stories making headlines across the industry. I'm Stephanie Hughes. This week, Apple invests $500 billion in American jobs and factories. Nvidia's quarterly earnings beat expectations after DeepSeek disruption. And Bitcoin drops after the crypto exchange Bybit loses $1.5 billion in a hack. I'm joined by our regular contributor, Anita Ramaswamy, a columnist at The Information. Hey, Anita.
Great to be here, Stephanie.
So we're going to start with our bite of the week. This is one number that provides some insight into what's going on in tech. Anita, what is your number?
You said it already. It's $500 billion, and that's the amount Apple plans to invest in U.S. jobs and factories related to AI.
Yeah, so let's talk about it. So over the next 4 years, the company said the money will go towards, among other things, hiring 20,000 people and building a new AI server factory in Texas. This comes a week after a meeting between Apple CEO Tim Cook and President Trump, who said they've talked about increasing production in the U.S. Anita, Apple is calling this its largest spending commitment ever. What's your sense of what this amount of money, $500 billion, could really do for American tech manufacturing?
So I think the interesting part about this is not so much the amount of money that's invested, but where it's being invested. And that's just because the $500 billion, while it's a huge sum of money, is actually going towards things that Apple was anyway sort of working on or planning to do. So a lot of it is around support for their Apple Intelligence AI product. And some of it is going towards Apple TV Plus production. Some of it is going to be, the majority of the money is going to be invested in data centers and the infrastructure to support that. So that's really for Apple to be able to run its AI models, which they're going to offer to customers. But the reason I thought the location was a little bit more interesting is because this is all spending that Apple is doing anyway. They've talked about in past quarters, kind of building out the AI product. But what's interesting is that they're saying, hey, we're going to actually spend this all within the US specifically. So they're trying to emphasize aspects like job creation and sort of give a nod to the next or to the current presidential administration.
Yeah, to your point, do you think we're seeing, a real shift in production? A lot of Apple's manufacturing does take place in Asia. Is that likely to continue, or are we going to see more manufacturing here in the U.S.?
I think we'll see more manufacturing here in the US, but what's kind of interesting with that too is that Apple, if you read the fine print in this announcement, talked about how they're planning to build out this big manufacturing facility in Houston with its partners. One of its partners, it's very possible, could be Foxconn, which is one of their suppliers. Foxconn actually announced last year that they are planning to build a big manufacturing facility in Houston as well. So it kind of raised the question for me. I wonder if there's any connection between the two. And, when it says Apple and its partners are planning to build this out, is it really just Apple, or are there other perhaps Asian companies involved?
Yeah. I also want to ask about workforce. Apple says it's creating an academy in Michigan to train the next generation of U.S. manufacturers. This made me wonder what sort of skills is this workforce going to need to do these jobs?
Yeah, it might be different than what one would initially think because, when you think about these massive data centers, you would think that they're taking up so much land, there's, a lot to do. But actually, the data centers themselves don't employ that many people. So the 20,000 people who are going to be hired are not just going to be working in the manufacturing facilities or the data centers alone. There's also that number includes like corporate employees. It includes folks who are working on production for Apple TV Plus shows. And so it's really a diverse range of jobs.
All right, let's move to our next story. Nvidia's quarterly earnings beat expectations after DeepSeek disruption. So the chipmaker Nvidia reported this week that it had record quarterly revenue of around $40 billion. That is up 78% from the same time a year ago. Nvidia is known for making chips that are key to powering AI tech. So Anita, the bulk of this revenue comes from sales related to data centers, like you were talking about. What does this tell you about data centers as a market for chips now and in the future?
NVIDIA's revenue and the way that they've beaten revenue expectations every single quarter has been incredibly impressive. I mean, this was another quarter of really, really good results. And it kind of shows that the big companies in tech, the Googles, the Apples, the Metas of the world are still willing to invest multiple billions of dollars into building out AI data centers. And we haven't really seen any indication that that investment is slowing down in any way. NVIDIA continues to be super dominant, but the market is expecting a lot from them. So it was interesting that even though they reported really good results, they reported revenue in the fourth quarter was up 78% from last year. They reported 80% rise in net income. And still their stock price fell just a tiny little bit.
I know. We're talking about wild amounts of money too. So this report came after some jitters in the last month or so over how needed Nvidia's chips will be. After the Chinese company DeepSeek said it was creating its AI models for way less money than American companies. What does this earnings report tell you about the need for chips to power AI, even if it costs less than we thought it might?
So with DeepSeek, I think the fears have been proven to be a little bit overblown at this point. We're seeing that NVIDIA is still seeing really strong demand for its chips, and they're still back ordered. They're still over ordered. The demand for their new generation chip, Blackwell, has been really, really strong. And so at the end of the day, I mean, yes, maybe we'll be able to train AI models a little bit more cheaply in the future. But another component of this is that in the past, people believed that NVIDIA's chips maybe weren't as good for the inference process, which is when you actually ask the AI model questions and not just train it. That was something that Jensen Huang talked a lot about on this earnings call, where he was saying that actually our chips really are great for inference, and we're seeing a lot of demand for that use case.
We did talk about that. For regular people who maybe they invest in the stock market, maybe they don't, but they definitely use technology, what's one thing you think they should know about NVIDIA and how it's doing?
It's doing really well. I think the demand continues to be strong. And, at some point, though, these companies are investing so much money, they're going to want to see a return on their investment. And the chips are really expensive. So as, somebody who's thinking about the stock market, that's what would be top of mind for me is, at what point, like, are we each quarter, I'm asking myself, are we getting enough sort of metrics, not just from NVIDIA, but the other companies that are actually putting out these AI models? Are they able to sell AI products? Is there traction? Like, are people actually using AI models in their day to day? Because that's sort of an indicator of what's going to come for NVIDIA in future quarters.
Is there any metric that you wish the company would give us that they're not?
Revenue from their software sales, because NVIDIA doesn't just sell chips, they also sell the software to actually run those chips together. And that's been a really fast growing part of their business. They reported how much revenue it made in the last quarter, but they didn't say anything about it this quarter. So I was hoping for an update on that, maybe next time.
Oh, that's interesting. Yeah, it's good to listen to what they say, also listen to what they don't say. Okay, so let's move to our last story. Bitcoin drops after the crypto exchange Bybit loses $1.5 billion in a hack. So crypto assets had a pretty bumpy week this comes after the crypto exchange Bybit was hacked and lost an estimated $1.5 billion in digital assets. Bybit, which is based in Dubai, reportedly says it can cover the loss. This is the world's second largest cryptocurrency exchange by trading volume. Anita, before you came to journalism, you worked as an investment banker. What does a hack on an exchange of this size say to you about crypto as an investment generally?
It's definitely risky, the fact that this can happen. And it's the same group, actually. The FBI thinks it's the same group, the Lazarus Group, which is a North Korean state-backed group that has perpetrated this crypto hack. And they've been behind a lot of other high-profile crypto hacks. And it seems like the industry just keeps having the same problem and can't really do anything to figure it out.
Yeah. And I will say, like, this hack comes at the same time that another big crypto exchange, Coinbase, based here in the US, said the SEC was dropping a major lawsuit against it. What can we expect for the future of crypto regulation, even if there are big losses?
I think with the hacks, it's hard to put a regulation in place that really stems the losses because it's a technological problem at the end of the day. The funds were stolen from what's called a cold wallet. It's just it's almost like a USB sort of thing that stores your cryptocurrency. It's like a hardware wallet that exists offline. It's not connected to the internet, and hackers are able to somehow get into that and take funds. So regulation almost exists in a separate realm, I would say. And the hacks are an ongoing problem that I think crypto is going to continue to face, which is part of the reason why it's such a volatile investment. Now, when it comes to regulation, that news was perceived as good for Coinbase, good for crypto exchanges in general, because it means they probably won't have to deal with as much scrutiny about exactly what tokens and coins they're selling as they were from the US government in the past.
Yeah. I've recently been wanting to buy some crypto. I don't own any right now, not as an investment, but just to get a better sense of how it functions. And I learned you can buy a fraction of a Bitcoin, which is good because I don't have the money to buy a whole Bitcoin. What advice do you have?
I don't either.
What advice do you have for anyone who's thinking about buying some crypto right now?
I think just know that it's risky and know that it has a place in your broader portfolio. Don't necessarily go all in without knowing what you're getting into. And there's so many cryptocurrencies out there, but Bitcoin is the best known one. I think, kind of looking at like knowing what you own and then also knowing that you're storing it in the safest and most secure way possible. Yes, a cold wallet can still get hacked, but at the end of the day, it's a more secure way to store your crypto than just storing it online. If you're storing it online, you'll get what's known as a seed phrase, which is sort of your super special password to unlock your crypto that nobody else should have access to. So it's just a matter of taking some basic precautions, making sure that you're aware of the risk that it's still possible that there could be a hack, there could be losses, and you're not necessarily insured to be getting those back from the company that you're investing with.
Yeah. Do you have any advice for, in terms of precautions to like, one precaution to take as I buy my fraction of a Bitcoin, or fraction of a, what's one thing I should do?
I mean, I would say maybe keep it in a cold storage wallet, but obviously those get hacked too. And also they're more complicated to use and to set up. So I wouldn't necessarily recommend that to everyone unless you're willing to spend the time to really get in there. The other thing I would say, just to my point earlier, is know how much you want to own and like keep the understanding that it's possible it could go to zero.
It could all go away. Yeah,
Yeah,
it's a gamble. Yeah.
no guarantees.
No guarantees. Anita, thank you so much for talking with me. That's Anita Ramaswamy, a columnist at The Information. And thanks to all of you for joining us for Marketplace Tech Bytes Week in Review. Daniel Shin produced this episode. I'm Stephanie Hughes. This is APM.